some more exclusive details on what exactly Cyrus Mistry's plan was for the entire Tata stable and what might have led to maybe a few differences?
So the first one is what I think I'd like to stick to, because the second one is completely purely conjecture and mostly speculative in terms of whether there were differences and what were the differences about. So this is what I'm picking up, and this is kind of pieced together by sort of various conversations I've had with all people across the spectrum. I mean, be it investors, be it old sort of corporate veterans, and this is what I sort of want to put out. So Mr. Mistry had a clear plan to sort of exit the loss-making businesses at the Tata Group, and also what the group under Mr. Mistry identified as non-core businesses, non-core assets, so as to speak, right? The plan was to first tackle the loss-making ones, companies which didn't make a profit, and then go on to some of the non-core assets. This, by the way, so these are two categories under two heads, and a little later I'll try and put out. There are some 57 Tata companies listed, by the way, right? I'm going to sort of consolidate a list, and we can try and put companies under these two heads. One loss-making, which I think is going to be fairly easy. With the other one, of course, is non-core, what the group considered non-core for them. So many investors were sounded out about selling some of these companies. Two companies, sort of businesses which Tata's had sounded out investors they wanted to get out was Voltas. I don't think we've kind of heard anyone talk about Voltas per se, that Tata's want to get out. Arguably it's the leader in the air conditioning market in the retail side, some 23-24% market share, etc. But this was sounded out to investors that they'd like to put this on the block. The other was the entire financial services business. So, for example, if you see under the financial services business, the mutual fund recently got a new CEO. The plan was to kind of build it up to a certain scale and then sell this off as well. Right? So Voltas and financial services businesses are what you describe as non-core to the Tata Group under Mr. Mistry. Three areas were identified as core. One was auto. The second is technology. TCS and other technology companies, the Tata Elxsi and a couple of others as well. And the third, of course, is steel, which is the Indian business. Chorus, of course, we all know what the plans were in terms of them trying to get rid of the overseas assets, the Chorus assets. Even within these three, auto, tech and steel, I think it's pretty clear that there were plans afoot, underway to kind of optimize these assets and gain more productivity and more returns from each of these three assets. So I think this was essentially the plan for kind of what you describe as consolidating the sprawling Tata empire in that sense under Mr. Cyrus Mistry.
Okay, but that's probably one of the key contention points that the market is grappling with as well. What's the future of Tata Steel, right?
You'd imagine so, but again, as I said, this is what the plans were under the Cyrus Mistry group at Tata, which now has been kind of.
But your conversations, did that bring up maybe what Tata Steel could be?
It's tough to say, because then. But I think the conclusion, that conclusion is born from the fact that under Ratan Tata, for 2 decades, the group expanded, right? I mean, they got into lots of different businesses.
And to be fair, even the debt.
The debt, acquisitions. I mean, Tata's, for example, between 95 and 2010 or so, 2011-12, actually spent some $20 billion in acquisitions. The two big ones, of course, are JLR and the Chorus acquisitions, but $20 billion. So I think the conclusion that, well, there was, Mr. Mistry and his group were pulling in one direction and the old guard did not like it. That's kind of borne out from the simple fact. And I think it's logical as well that you had an expansionary phase, and under Mistry, the focus was on kind of consolidating and focus more on things like return on capital employed. Right? So that's the bit.
Okay, but let's stay with this story.